One of the most common mistakes that I see new traders make is thinking that every single day they could do the exact same thing and the market is going to reward them the exact same way. Now, the issue with that is that the market does not give you the same opportunity every single day, and it also doesn't do the exact same thing every week, every month, and every year. Sometimes there's going to be choppy years, sometimes there's going to be trendy years, and you have to be able to adapt depending on the market environment. I am mainly a momentum swing trader, but when the market starts to tell me that it is slowing down and a lot of chop is happening in the market, I have to be able to adjust, because if I keep doing the same thing when the market is not in the same environment as it was maybe last year, then all I'm going to be doing is just accumulating loss after loss after loss. Whenever you take a few losses, you have to step back and you have to realize, what is the market environment doing? Now, in today's video, we're going to break down the exact strategy that I'm employing right now while the market is slightly choppy, and the one that has been able to make me a ton of money by just looking for the specific thing before I enter. Now, breakouts are probably the best way to buy stocks whenever the market is trending, but whenever the markets are becoming choppy, you want to know different entry models to be able to get into the best stocks. Now, the most important thing is you still want to understand we are trading the best stocks in the market. This doesn't work on just any stock, just like breakouts don't work on just any stock. You always want to be finding the best stocks in the market. You always want to be scanning for the ones that are going to be leading the markets higher, and these are the ones we're going to focus on. Now, in this video, I'm going to break down my entire undercut and rally strategy. All right, so before we start and understand how to actually trade the undercut, let's explain what an undercut is and the three types of undercuts that there are in the markets. So what an undercut essentially is when a stock makes a big move up or a big move down. For this context, we're going to look at a big move up, and then it starts going sideways. So this is called building a base, consolidating, and basically setting up for the next leg up. Now, usually what I would do is I would buy the stock as it breaks this level right here, because I'm looking for the continuation. Stocks move like staircases. They go up, sideways, and then they go up. But when the market is choppy, what you usually notice is that you're stuck in this phase a little longer than usual, because there is no new highs or no new lows that are being made, and the market is just chopping, or it's getting very hard to make a big move up before it undercuts, which is exactly where you want to start to buy it. So what does an undercut look like? Well, instead of making that leg up, what the market does when it's choppy is it'll go up sideways, 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 like this. It'll build out in a range, and then you'll have the lows and you'll have the highs that you can mark out. Now, what will end up happening is instead of breaking up, you'll actually see a breakdown, because the market isn't as strong as it is when it has a lot of momentum. This is going to be what essentially an undercut is. When you get under a previous low that a stock hasn't been able to get under, that is an undercut. And that isn't just the time to take the trade. An undercut doesn't necessarily mean we're going to pounce on this trade. The most important part of an undercut is waiting for the reclaim, which is where you want to trade. And that's on the right side of the chart. Once you start noticing that the stock undercuts, you're going to watch to see if it can reclaim. Reclaim means it gets back above the level that it broke below. So this was the level that it had to hold. It broke under that spot. Right here is going to be the reclaim. This is going to be where you're focusing to get your entry. You don't want to try to time the bottom right here, because this could just continue to downtrend. You want to buy it right when it comes out of the right side and then reclaims. Now, look essentially what ends up happening here. You have basically the break right here, and then the stock ends up going lower. And guess what happens here? All these longs that are expecting the market to go higher are all getting stopped out right there, right when that low breaks. And all these shorts now that want to short this because they think it's going lower because it broke a key level are also getting into the trade now. So you have a lot of volume that's being exchanged in this area. And this is what's called inducing liquidity into the market. This means a lot of new orders are coming in, a lot of volume is coming in. And this allows for the market makers to basically make a massive move the other way when this area fails, because when it fails to hold right as a resistance level and go lower and the stock reclaims, all these shorts here are now trapped. They have to basically cover, meaning buy back the stock. And then everyone that got stopped out here is now going to want to get back in on this thing and end up chasing it as it continues to go higher. And this is where the big move actually starts. So your goal is to basically enter right near this reclaim level and be able to catch the reclaim part of the undercut. So undercut, reclaim, and then the push higher is where the big move happens. Now, the most important thing is we want to use this on the daily time frame. Do not use this on a 5-minute, 15-minute, 10-minute chart, because the best reclaims happen where the daily low is, because so many traders have their stop loss at low of day. You want to look at previous day's low or a big level in a daily sequence. So this would be on the daily chart like this. This could be a daily level. The moment it sweeps that is going to be what we want to look for. Do not use lower time frame levels, because the bigger time frame is going to be exactly where you want to look for in terms of the sweep. All right, so that is our first undercut and reclaim. Now we're going to have our second type of reclaim. This is not really going to be an undercut and reclaim. This is going to be more so what's called an RDR, which is a red dog reversal, coined by the trader Scott Redler, who's a great trader and basically came up with this concept. So a stock basically makes a large move up, and then here it starts to kind of reverse. So it goes down, it goes down. You're looking for like 3 or 4 red consecutive days in a row where the stock goes lower, and then you're marking out the previous day's low like this. Now, what happens a lot of times is after a big move lower like this, the stock starts to kind of form a flag like this, right? You don't really have a clear structure, but it's more so just a move down. You get the undercut on the previous day's low. Because you don't have an actual exact level to look for the undercut, you're going to look at the previous day's low, which we marked out. The stock kind of goes up, then undercuts previous day's low, comes back up, holds, and then makes the breakout. This is called an RDR, or a reclaim of the previous day's low. So the stock breaks previous day's low, it reclaims. This is going to be your entry. And as always, the stop loss goes to the low. So this is your entry, stop at the low, and you're going to be targeting this high right here. Very, very simple stuff. Once you get the concept down, the hardest part is being able to actually find this during the market hours and execute on it while being, pretty quick and not taking it too late into the day. All right, now that we understand what an undercut and reclaim looks like and the two types of undercut and reclaims, we can start to look at a few examples of undercut and reclaims, as well as which stocks we want to look for on these UNR plays. So first of all, finding the right stock. We don't want to just trade any stock in the market. So how do we actually find the right stock? So what I want you to do is use a screener. I like to use tradingview.com. This is the charting platform that I use. Go over to the screener tab right here. And the reason why we want to use this screener is because it shows us the best stocks in the market. And this UNR strategy works incredible on the best stocks in the market, because these are already stocks that are leading. So when they undercut, they usually do make a very big move the other way, because everybody is looking to buy these. The market makers are just trying to induce liquidity first before the big move actually happens. So this is the scanner you're going to use. You're going to use these settings right here: price over 3 USD, change over 0.01%, market cap 300 million USD, EMA 50, EMA 21 set to below price, average volume 500K, and then ADR to 2%. Now what this is going to do is basically give you a list of some of the strongest stocks in the market. You can see we have about 326 stocks out of like 15,000. So it really narrows things down. You want to sort by volume descending. Now, when going through these charts, what you're going to start noticing is obviously the charts will start popping up, and then you want to start looking for a specific pattern. All right, so the specific pattern that you're trying to look for is basically a base, a flag, a wedge, or any type of pattern that is setting up for continuation. So for this example, you could see Nvidia doesn't really have anything because it's just going sideways and it hasn't really made any big moves. It's just kind of, going sideways, and it doesn't have any levels that we can really use that are critical. This one right here doesn't really have anything either. We're looking for things that are getting super tight. So this is a good example here on IREN. You could see we have the high right here, and then we have the low right there. And you can actually see this already undercut right here, and then now it's making the big move up. But this would be kind of the level that we want to watch, right? This is exactly the setups that we're looking for on some of the best stocks that are uptrending. Here's another example. This is the ticker APLD. It's made a pretty big move up, and now it's setting up in a super tight flag like this. This is where we're going to be starting to look for undercuts. You could see there was actually one right here, and then one right here as well on the previous day's low. These are the types of setups that we're going to be looking for to be able to find these undercuts. Here's another example of this stock right here, FCX. You could see it has the high pretty perfectly, and then the lows, right? So if we can mark out the highs and the lows, that's exactly what we want to be able to do. We want to be able to trade a stock that's basically going sideways like this, that's close to either the highs or the lows, and then we're able to catch the undercut. So now, how are we able to do this, and what do we look for the following day? Because the undercut is something that does happen the same day, and it's something you have to be able to anticipate. So if we're looking at FCX for an undercut, what I like to do is set an alert like this. So I set an alert at the lows like this, and then the stock is crossing under this level right here, right? So you can do crossing down like so, 57.86, create, right? Once you do that, that tells you the stock is undercutting, right? So it's getting below the level. Now remember, we don't want to just buy it right when it gets below. That doesn't do anything because the stock can just go lower. We want to actually buy it when it's coming back up. So we can set another alert like this, add alert, and then this could be crossing up. So once you get both alerts, you'll now know that there has been an undercut and that there has been a reclaim of that level. And that is going to trigger your entry protocol. And I'm going to show you exactly what you're going to be looking for in real time for these entries. All right, so here's an example of a trade that I took on the ticker USAR. This was the base. You could see we hadn't made any really new highs or any new lows. And this is what I was watching on this day right here. So I marked out the low and I marked out the high of the space. And another good thing is also looking at the moving averages on the daily. If you have the EMAs stacked right against each other, if you get an undercut of the moving averages, that's even better. The more levels you undercut, the more key spots that price breaks and then reclaims, the bigger the move the other way is going to be. All right, so you could see this is the next morning. The stock basically undercuts this low right here and then breaks under and reclaims. Now, if we look at the smaller time frames on this, you can see exactly when this happened on the 15-minute time frame. And this is exactly when it happened. You had the break under, and then right here, you started seeing the stock try to get back above, couldn't, and right there, boom, was the first time it was able to get above. This is where you want to start looking to enter this on the reclaim. The moment it starts to reclaim and close above this level, this is going to be your entry. This is going to be your stop loss, and you're going to target the previous day's high like so. That is going to be your main target for the move. All right, now you could also see this made a nice move off the low. It didn't hit all the way at the highs, and then it went inside day right here as well. So now the stock is kind of telling you it's not really ready to go higher. It did put the undercut in, and even if you entered right here and your stop was at the low, you're still kind of in profit here, but it's not ready to go higher. It can look to undercut the previous day's low like this, and that's where the second kind of undercut comes. That's going to be the RDR. So you mark the previous day's low like this. If you are ready to try to get into this stock, you're going to look for that stock to undercut the previous day's low. So right here, you could see it ends up going under that low and then it reclaims. And if we go on the 15-minute time frame, we could see exactly just that again. So right here is going to be your undercut. Right here is going to be the reclaim. This could be your entry right here. Stop loss goes to the low, or any of these candles that closed above the level could work as well. Then you have an absolutely beautiful entry. And then you could see the next few days, this thing ends up ripping off of the undercut and rally. This is going to be your entry. This is going to be your stop loss. And you could just hold this thing as long as it continues to go higher because you got an absolutely beautiful entry. Now, the big difference between this strategy and trading breakouts is you have to know which stocks you want to get into, because it is going to be very hard to screen for the right stocks, be able to look for an undercut and rally. So there's a little bit of a skill barrier here. It's something that if you learn this skill, you'll be able to make so much money with this strategy. But you have to know which stocks you want to get into. And the most important thing is you need to be looking at stocks that are strong. So for this example, RKLB is one that I traded, has made a 113% move. This is clearly a stock that you want to be in, and the market is going to reward on the undercut. So you could see the setup that I took on this one. It had a tight flag right here. And as we said, right, we want to look for a key level of resistance and a key level of support on the base. Right here was our support level. This day right here, you could see it undercuts the low. If we go down on the 5-minute time frame, we could see exactly how that looks as well. And then we have a super nice move. All right, so here's how this looks in replay. You could see the stock ends up basically gapping up, breaking the level right there, reclaiming right here. This is going to be our entry. The moment you start seeing that, this is going to be where you take the entry, especially if there's volume. Stop loss goes at the low. And then from here, all you're looking to do on the trade is target the high. This is going to be your main target. And you could see this thing ends up getting there. If we play this out, you can kind of see this thing ends up pushing all the way up to this $80 level and making an absolutely massive move. And as always, when you're swing trading, nothing is going to make a straight move back up, especially in a choppier market, but you're able to eventually get your target as this thing continues to trend and make a lot of money on these moves. All right, now the best undercuts are the ones where you add everything that we talked about up. So not only do you have the undercut of the base, you have the previous day's low undercut, and you have the moving averages undercut. So on the ticker ASTS, you could see we had a pretty nice move up. The stock started going sideways and building the base. You had the highs of the base, the lows of the base right here. This is clearly the low that this stock wanted to protect. On this day, it undercuts the previous day's low right there that I marked out, this low, and the moving averages, the 8 and 21 EMAs, and then it reclaims to make an absolutely incredible move higher. And again, on the replay, we could see this happen in basically real time. You get a break of that low right there. The moment it reclaims on this candle right there, this is going to be our entry. Stop loss goes to the low, and then from there we could just swing this with super tight risk. And the reason why this strategy works so well is because you get such a low risk entry. You're just risking the low that the stock made after the undercut, and then you hold this thing, and you could see the first day this thing literally just went straight up, and the next day it went straight up as well. And your main target is going to be this high. The moment it starts hitting that high, that's going to be where you're going to be looking to take some profits and swing the rest of the position basically risk-free because your entry was so good. Try the strategy out for the next few weeks and see how much money you're able to make off of these undercuts. And again, remember, the most important thing that you have to do is make sure that you're looking at the right stocks, the one that pop up on the scan, the one that are in the strongest themes and making the biggest moves. And while the market is choppy, just understand you don't always have to press. This is a great strategy, but you don't want to use a ton of size when the market isn't really in the best type of environment. But you could still use this to make a good amount of money right now until things start to actually get some momentum and pick up. I used this strategy for the last month and I've made over $200,000 trading. So if this helped out, please leave a like and subscribe to the channel down below for more content like this. And let me know if there's any other specific videos or strategies that you want me to cover and help you learn. I hope you enjoy this video, and I'll see you guys all in the next one.